So guys, this video will be focused on the NQ market maker buy model trade which I took yesterday. There were many questions among you that what is the breakaway gap entry, what is the SBZ zone entry, what is the mitigation block plus MT should not be tapped secret sauce concept which I marked there in my trade executions. So let's try to make this video quick. I have my exams going on, so I'm managing time to do so to make this video. Also, if you have any disturbances in the background that you hear, please try to ignore it. Like, I'm not at my home right now, so there may be some disturbances which you can get. So please try to cope up with me. As this video is so informative and it must be given to you as soon as possible, I am making it right now. Alright, so the above chart is Nasdaq, the below chart is, let's make this full screen. Oh my god. FN, yes. The above chart is Nasdaq and the below chart is SPX. This is the daily time frame. So what we see on the daily time frame is that we have a daily FVG in Nasdaq, and also we had this lows which you can see of 23rd April. These lows of 23rd April were swept by SPX, but they were not swept by Nasdaq. I have just marked this low so that we can take reference here when we drop down to the 1 minute time frame. And also my bias for the news trade, it was bearish, but after the news release, I also said in the telegram that DXY looks bullish for today. But still I traded the bullish trade in the Nasdaq. I will tell you the reason why. Now you can see this whole scenario above. You can see that there is no major SMT. These highs, there is no SMT. Also this up move created no major SMT. So this fall was, according to me, the manipulation on the daily power of 3, which means accumulation, manipulation, and now distribution, because there was no major SMT or no major manipulation to the upside. If there was a major manipulation to the upside, I would in no way be bearish. In fact, if there was a manipulation and SMT on the upper side, I would look for a market maker sell model in this move. But I look for a market maker buy model because we had a daily FVG and there were high chances that we can close the daily candle above the daily FVG. Also, we were having this SMT which was getting formed. Now let's drop down to the 1 minute time frame to get into more detail. Just hold on, guys. Right here. Yes. Okay. Alright. So you can see this clearly that there was a major bearish SMT that was going on in Nasdaq and ES, and this is the daily low which was taken by SPX. So what we have here, this is our higher time frame SMT. This is the SMT of the daily lows, which means I am bullish until and unless Nasdaq is above these lows, because SPX was trading below these lows. Also we were having a 1 minute SMT. You can see that these lows right here in Nasdaq and these lows in SPX, when this move was coming, SPX was like just going down and down, and Nasdaq was looking extremely bullish. So my lower time frame SMT was also strong. So what I did here is, first of all, I need to identify my IFVG, and when market shoot like this and went up in this direction, I had this IFVG mark. These lows rejected from this IFVG right here. Yes, so this was the IFVG which I marked, and there was this candle-to-candle SMT, or I don't know what, but yes, there was an SMT which was formed here, but I didn't traded it, and there was a major reason for that, because in this bullish up move there was no SMT on the lower side. Also the time at which this formed, 9:45, was not what I was expecting. I was expecting a move to happen in the macro, in the core macro of the 10 minutes. Also, why I did not trade this was because this was a counter trend trade. You can see market just fell so much, and to trade this immediate move above the IFVG can be a bit risky at this price point. In fact, I said that even if prices continue higher, I will trade other entries that form above. For example, breakaway gap entries, or we can say that many entries, as we said, zone entries. But I was not interested in selling immediately above this IFVG. Right, that's clear. So I waited, and that was a good idea because this entry took SL. And another major reason was that the IFVG in SPX was this one, right? In SPX we were rejecting from the IFVG still. Nasdaq we might be closing above the ifvg, but in SPX we were rejecting from the ifvg and we were unable to give a good displacement above it. So this made my idea more powerful that I will not short at this price point. I will wait for prices to go higher and then short and then long. Otherwise I will wait for a retracement and then long. So now when this retracement was going on, SPX took out all these lows, so it was a major SMT which was forming. Now in this scenario, there are two. The entry which I took on the mitigation block is a supplementary. You can trade it with if you have enough practice, but mostly I would not suggest to everyone to trade it. So you can see that this red candle in this bullish move, there was this red candle, and you like, let me tell you something, that this red candle is called a mitigation block, right? This block will support prices higher if prices drop to it. Now another major characteristic of a mitigation block is, if a mitigation block is valid, then price should never trade to the mean threshold. Mean threshold means 50%. If the mitigation block is absolutely valid, then prices should never trade to this mean threshold of this mitigation block. That is, this 50% line of this mitigation block should never be traded to if this mitigation block is valid. And when this happened right here, what I was seeing is, and during this move also I was interested in buying, like this also respected and not tapped into the mitigation block mean threshold, but I was not a buyer here because for the only sole reason that I wanted more and more confirmation, right? I was interested in buying after the ifvg disrespect into these candle-to-candle SMTs, because these mitigation block empty entries can also fail. They are not 100% accurate, right? These are 1 minute mitigation blocks, but they can give you sniper entries if you know how to use them. You can see I did not trade these moves and I only traded this move, and there was a reason behind it. Because this candle right here, when it was forming, it was an open high, it had a big enough wick on the upside, and then it came low and then it closed like this. So in my open is True CISD video, I have told you that if there is a big enough wick on the upper side, then I don't buy on the crossing of the opening, right? I need a minimal wick or a no wick on the upside and then low. In that scenario I will buy on the crossing, quite simple. And this candle right here gave me that. This candle was an absolutely no wick open candle, low and then a high. Also it respected and did not tap the 50% of the mean threshold mitigation block, and it went up. So I went in long somewhere here. See, I would not suggest any one of you to take these entries. These are like, I personally also don't take these entries much. It was once in a month or once in a 2-month time where these entries form. I will give you the second entry which formed here. This is the entry which you should take. Now looking at all these confirmations, SMT mitigation block 50% being respected, when prices continue higher, we have what we see. This is our classic entry which we trade day in day out, which is my favorite entry. You see this candle, 10 o'clock 10-9 candle. This candle was unable to take out the lows of 10-8 candle in Nasdaq but in SPX it did. So what is this? A candle-to-candle SMT. This candle might have closed as a shooting star, but if you see my execution videos, you will see that it was an open low high candle and I entered somewhere here. And for this entry, your stop loss is absolutely below this low, below the SMT low, and you can trade it and hold it. So this was the second entry. This is our classic entry which we trade every day. I don't want to go in much detail about it. Now what is a breakaway gap entry? The breakaway gap entry that formed higher is, for a breakaway gap entry you need a Rdrb, and in this price leg, where is an Rdrb? Rebalanced delivered price ranges. This right here is our Rdrb. So what this means is, if this Rdrb gets tapped right here, then there is no point of price to come all the way lower to take out this breakaway gap. Now this gap becomes our breakaway gap. I will explain it to you very clearly. See, this is an Rdrb. You should know what an Rdrb is. If you don't, please go watch a video. It's only a 5-minute videos, and there will be multiple videos available on YouTube. Search what an Rdrb is in ICT. So this right here is an Rdrb. If an Rdrb is formed above a FVG and the Rdrb gets tapped and is getting respected, then what you can anticipate is that price will never come to fully fill this breakaway gap. Fully fill in the sense you should place your SL at the ending of the breakaway gap, not at the beginning. The prices can come to the breakaway gap, but it will not fully fill it. It will not like happen that it will fully fill it and go up. It will just partially fill it or fill it till the 50% and then go up. So this is the concept of breakaway gaps with Rdrb. So when price tapped here, right here somewhere, I entered long on this open low high candle. This was the third entry which formed. And also, what is the SVZ zone entries which you also asked. Now let me clear you one thing. See, this was one buy side liquidity which was in my mind, and I took my 80% position off at this buy side liquidity because it was counter trend, a huge down move and then up move. So I was not interested in holding the trade for long. So what is this? When your target is close enough, when your target is extremely close and you see an accumulation forming right below your target, which means that this is my target, this is where my market maker buy model will end, and there is an accumulation right before hitting the target. What does this mean? This right here is an SVZ zone. It's very simple, don't complicate it. When the final target of your market maker model is extremely close and before that target you are having a consolidation, that consolidation is an SBZ zone. And if you get a candle to candle SMT or you see prices respecting ifvg, that is the prices respecting FVG, in this case it is our Rdrb, you enter long, because there are extremely high chances that if the consolidation is happening just below your final target, then price will just shoot up and take this high out. This is just accumulation of more longs, quite simple. And also if you like see, there was a candle to candle SMT here as well. Hold on. Yes, this candle's low, this 10-14 candles low were not taken out by Nasdaq, but in SPX these lows were taken out. So there was another SMT here which confirmed the entry with a mitigation block and the SVZ zone. So I will just recall all the things once again. Valid mitigation blocks mean threshold should never be tapped. This is a must for a mitigation block to be valid. This made my first entry. I don't advise any one of you to trade these entries, even I also don't. So I trade them once in a while if I feel like the setup is extremely good. Then the next entry is the above the ifvg, when prices are sustaining and we get a candle to candle SMT right here, as we get, this is the second entry. This entry you all know, which we trade it every day. Then we have the breakaway gap mitigation block, Rdrb. This was an Rdrb. Rdrb was getting tapped and respected. This implies that the FVG below the Rdrb should not be fully filled. So you can go long in here on this respect, or you can go long on this candle to candle SMT with your stop loss. Like see, if you are going long in this candle to candle SMT, then your stop loss will absolutely be below this low for the SMT itself. But if you are taking entry on the breakaway gap like mitigation block respect, which I did, then your stop loss should be here at the ending of the breakaway gap, because there are chances that the breakaway gap might get filled, and there are chances that the breakaway gap can fill to 50%, 25%, but the breakaway gap will never get filled to 100%, which means that it will never happen that this breakaway gap will be filled all the way down here and then price will go up. It will be shallow tapped or 50% tapped. Quite clear. And the SVZ zone. SVZ zone is the accumulation that happens just before hitting your final target or the ending of the market maker buy model. This is called the SVZ zone. And what the SVZ zone is basically is that it accumulates more longs to shoot prices higher. And you can see this huge volume candles which took out the price. This is not random. This happens every time. Just before hitting your target, price will make a accumulation, and this accumulation is called the SVZ zone or the silver bullet zone. So thank you guys. This was it. I have my exam, so I cannot make this video more longer, but I have covered each and every concept in this entry. Mitigation block empty, above ifvg candle to candle SMT, breakaway gap above a mitigation block, also a candle to candle SMT, and silver bullet zone SVZ entry. So this is it guys. Thank you so much for your time. And the major idea was this higher time frame SMT of the daily lows. This framed my whole idea that yes, price is bullish. So for the major questions, I have answered them. If still you have any questions, drop a comment below this video. I will surely answer them in the comments itself. Thank you guys. Keep supporting, keep trading, and stay safe.